Happy Monday. Happy Monday. Just another manic Monday. What's up, Dan Smith? How you doing, my friend?
Greg, I'm great. Thanks for having me. How are you?
I'm all geeked up, man. I don't know. There's something about you. I'm not
Yeah.
sure what it is. Aside from being the president and CEO of the Consumer Data Industry Association, CDIA, uh, also, you've got a background as a former CFPB and Freddie Mac guy. And ABA and Consumer Bankers Association. You have had some prominent roles, and arguably there's no more prominent role than the one you're in right now. And I can't wait to get into the practice of credit washing and how it's impacting every industry out there tied to credit, not just the mortgage industry, but there's been some data that's come out recently around the auto industry. And I know you've done a lot of work around this. Your organization has been very vocal that it is not in favor of a single credit file pool, and I'm not either. Of course, the MBA is moving in a different direction. We'll cover that as well. But before we get started, well, you're my neighbor, sort of, right? So we're kind of neighbors. I'm in Northern Virginia. You're not far from me. So we should acknowledge that, although we've never met in person yet. Yeah?
Yeah. I'm afraid we're going to run into each other all the time now that we see each other.
Well, what's interesting is it would be so cool in life if you could like pull some kind of database that showed how many times you've passed somebody in a car before or driven next to somebody. I wonder how many times you've been on the GW Parkway at the same time that I have.
Happens all the time. Once you know somebody, then you see them all the time.
So basically, I'm going to walk out of this room and at some point bump into you today.
Probably.
I hope so. I hope you're not disappointed with how short I am when you see me.
You're going to be.
Because you look like a tall guy. You look like a tall guy.
So yeah.
How tall are you?
6'3".
Oh, you son of a gun.
Yeah.
All right. So CDIA, the trade group for the credit bureaus, Equifax, Experian, TransUnion, and consumer data background screening companies. What do you do? We hear about the trade groups in mortgage all the time. We hear about CHLA and the MBA and others, but we don't often hear about the CDIA.
Yeah, well, CDIA plays our industry plays such an important role in the financial services ecosystem, but also in society as a whole. And, we're typically behind the scenes. Average consumer doesn't really know what we do or why we exist. They may know who the credit bureaus are, the three national, Experian, Equifax, and TransUnion, but there's 31 members in CDIA, and we do a lot of things that help protect consumers, to help the markets operate and function better. We're really a core provision of underwriting in society, right? You want to get a credit card, you can go on your phone right now and get a credit card before this podcast is over, because the credit reporting system provides lenders with a balanced, clear, transparent, accurate, complete vision of a consumer without a bias. So they can click on, and pull up a credit report and say, okay, I understand the risks I'm taking. And the credit reporting system is critical to that.
All right. So Equifax, Experian, TransUnion, we hear a lot about them all the time, right? And so It's a complicated picture. These three companies each own a third of VantageScore. There's been obviously a lot of dialogue around the credit bureaus, and so we're gonna get into that for sure. What is your correspondence like with those three? Are you in touch with them often? Is it once in a while? And to what degree do you communicate with them?
Every day, multiple times a day. So we are working with the largest credit bureaus and the smaller ones, the resellers, especially in the mortgage space. We have them, our members as well. We are constantly identifying how do we improve our system, right? We take our role in the ecosystem extremely important. It has its challenges. We have a clear law called the Fair Credit Reporting Act that we completely support its purpose and its intent. It keeps the system functioning in a clear way. There are clear rules of the road. It gives consumers enormous protections. It requires a dispute process when information is inaccurate. There's accuracy requirements. It gives clear privacy protection to consumers. It's one of the first privacy protection laws in this country, and it has helped all consumers by having a system in place. And it is really the backbone of why our system functions so well.
So credit washing, let's jump into that right now. I mean, this is something that has really afflicted the economy kind of in the underbelly. People don't talk a lot about it, but 10 billion in debt erased from credit reports. 5% of U.S. consumers have suppressed charge-off accounts. So we're going to get into what is credit washing, and it is so pervasive that people on TikTok, people on Instagram, people all over the place actually make a living showing consumers who have willfully neglected debts how to make them just disappear so they can be treated like an A-plus borrower when they're really a C-plus borrower or a C- or a D or an F. This is just one random example that I pulled from TikTok this morning, and then we'll get into it.
How really does this credit stuff? I had a client sign up with me last week, right? He had a charge off, a repossession, and like 6 collections, okay? I wiped it all off, okay? He started from the low 400s. Here's the proof. Now he's in the high 600s and the 700s. And guess what? That new car that he wanted, he's about to go buy. And I'm also about to help him build up his credit profile, because that's important. A lot of people just swipe off everything, but you also need to build positive credit history, okay? If you are on my page and you're not utilizing all the free information that I've given you, I don't know what you're doing, but I give a lot of free information on how to fix your credit on here. If you need additional information, everything is linked in my bio, from a credit consultation to removing collections in 24 hours to removing charge-offs in 48 hours, evictions. I have everything, and I even have a DIY group that's only $67, okay? It gives you everything you need to do to remove yourself out of check system so you can get a bank account and everything that you need to do, all right? So if you're making excuses for yourself, stop, okay? No more excuses this year. Y'all go buy your house, go get your new apartment, get your funding up, get your new car, whatever it is that you're trying to get. It always starts with your credit, but you need to be educated and you need to be strategic on how to remove these things off of your credit profile so that you have excellent history. Again, I have so many testimonials, so many reviews. I don't even feel like posting them, but the proof is in the pudding, y'all. I'm about to drop some more videos because I had my baby. I have a little more energy, so I'm back. Y'all have a good one.
Does that make your blood boil at all?
You know, it's really important that consumers have complete, accurate credit reports. And so there are consumers, we acknowledge the system's not perfect. There are inaccuracies. It's because it's a very complex system. You have 15,000 furnishers. You have 350 million plus credit files. Each credit file has an enormous number of trade lines within it, which means it's billions of data points. You can't have 100% accuracy. We all acknowledge that. Congress acknowledged it in 1970. They put in a system to allow the consumer the ability to dispute inaccurate information, not negative information.
But that's not what, but Dan, that's not what that is. That's not what that is. That is, let's gamify the system so you can go from a subprime borrower to a prime borrower.
Agree. So the challenge is to make sure every consumer has those abilities to correct inaccurate. We have a dispute process. You can go in, there's a law that regulates it. There's a time frame. There's a mandatory investigation to this is the key, to dispute inaccurate information, right? Not negative information. What we're seeing is a trend to attempt to remove negative information that is accurate from your credit report to do one of two things. They're either doing it to artificially inflate their credit score by removing that negative information, or they're getting rid of trade lines to use it as a tool to perpetuate more fraud or fraud in itself. Two separate type of entities. But the one we're talking about there in that instance is the consumer who is being told that they should do all of these things to remove negative information.
I just
Most
love
of
how
the-
they say I can fix your credit report
That's right.
as if it's broken. The consumer breaks it, and then this entity is fixing it. And I want to know how long this has been. How much of a problem is this? Is it a growing problem? Is it a diminishing problem? Put it into context for us, if you would.
It's growing rapidly. It's been an issue probably since 2010 and growing rapidly in the last 5 years because of technology. So it used to be that if somebody wanted to dispute a trade line, that's what we refer to it as, a trade line, an inaccurate trade line, they would have to contact the credit bureaus. Typically, they did it by mail or they call the 800 number. But with technology and systems improving, it's so much easier and free. They used to, credit repair organizations, which we should dive into later, would send pallets of letters to the credit bureaus, thousands and thousands of letters disputing trade lines, accurate trade lines, but negative, in an attempt to overload the system so that the credit bureaus had to remove that information until they finished their investigation. There's a 30-day window that a credit bureau or a furnisher has to do an investigation. And if they can't complete the investigation, they have to remove the information temporarily until they finish the thing. So that's why the score goes up, it comes off. Then they're inundating the system to create an overload so that things fall through the crack and we're forced to take it off. That's the purpose of what they're trying to attempt to do. What they're doing is they're trying to remove negatives so it looks better. It's artificially improved, right? We fully support the inaccurate, right? If something is not right and you can show it, we have a full system where you go directly to the bureaus electronically. You can file a legal dispute under FCRA. You can upload information saying, hey, this is not correct. Here's documentation that shows that I paid this. Here's the canceled check. Right? Those are legitimate disputes. What we have is an industry through TikTok, through YouTube, through credit repair organizations who are charging consumers to do something that they can do for free in an attempt to artificially improve their credit score.
Are we seeing this bleed into mortgage? Do you believe that this is pervasive in mortgage lending?
So once it is impacting the entire credit report. So if they remove a trade line on an auto loan, right, they dispute the accuracy of an auto loan and the auto loan goes away. The mortgage lender will not see it when they're doing their underwriting of the mortgage. So it impacts the entire industry because the score is artificially inflated.
Why is it so easy to do this? Aren't there measures that we can take that you're in favor of to make it more difficult so people at least have to, at the very least, substantiate that it's not accurate? I recall having that discussion with you about 6 months ago.
So it's a balancing act, right? You want to make sure the consumer has the legal protections under FCRA. We want the information to be as accurate as possible. So you have to sort of find a balance. And we see them using AI and cutting and pasting, and they tell them exactly what they do, and it just bogs up the system. The CFPB complaint portal back in 2019 had a roughly 300,000 complaints a year new, and now they get 5 million.
Wow.
5 million, and 4 million of them are credit reporting, and our numbers show that 95% or greater of those 4 million are an attempt to wash your credit and remove negative information.
All right, wait, stop there. So it used to be under 300,000 a year. Now it's 5 million, of which 4 million are credit, of which over 90% is basically fraud or an attempt to create some kind of a misdirection. I'll call it, if you don't want me to use the word fraud, no problem. I saw you start to roll your eyes, or you maybe got cross-eyed there. I'm not sure what that was, but no, we can be sensitive and mindful here. But so I need you to explain that, though, because what does that do? You're giving us the numbers, but what does that set in motion when you report that and you are making that attempt? Does that immediately start the clock where all of a sudden it's taken off?
So what happens is you submit a complaint. Like, let's go through the legal step. Like, there is a legal dispute under FCRA, and what you're supposed to do is go directly to the lender or to the CRA. Right? They both have systems in place to manage that legal dispute. Once they get the dispute, they have 30 days to do an investigation. a reasonable investigation. And all these large financial institutions in the CRA have oversight by the CFPB for over a decade, and they have policies and procedures how to handle those legal disputes. What's going on is they're going around that process and going to the CFPB complaint portal and putting in millions of complaints in a hope to overwhelm our system where we don't have the resources to do that investigation in 30 days. And they continually do it over and over and over again on the same trade line.
Dan, when they file that complaint, does that immediately give them a window where those derogatories are removed?
It's not immediate, no.
But it happens. It sets the process in motion, or is there more to do at that point? Are we just talking semantics here? Do you file the complaint, give the paperwork, and then in a few days it comes off?
No, so if it's a new dispute, right, the consumer submits the dispute or the complaint to the CFPB, depending on what approach they take. The lender and the CRA have 30 days to do an investigation. So no, it doesn't happen instantly. And a vast majority of them never get relief, right? Because it's really it's an accurate trade line, right? But it's free. It doesn't cost the consumer anything to send it to go online and submit a complaint. So they'll do it over and over again. They'll look at their credit report and they'll file 30 different complaints, 40 different complaints. They'll do it every 2 weeks. Like, there is this abundance of overwhelming the system.
Is it having the effect that they hope it has by going from 300,000 to 5 million to 4 million essentially?
Sure, because every lender and every CRA, not just the CRAs, but every large bank, small bank, community bank, independent mortgage banker has to take that complaint, that dispute and those complaints and process them. They have to do an independent investigation with reasonable procedures, and they got to do it within 30 days. So every one of those requires manpower to do it.
How has this impacted the bottom line of the organizations that you help to represent, Equifax, Experian, TransUnion?
Well,
I would imagine they've had to increase their compliance, and they've had to build a whole wing just to mitigate this.
Well, we always follow the law, and so we do them, right? It is a burden, but we're okay with the burden. The problem we see is that it is artificially inflating scores when a percentage of those people's data gets removed. We don't remove the data. We can just do an investigation, and the lender has to make the determination whether or not it's accurate or not. So lenders if they don't have the manpower to do the investigation, they are suppressing the information.
But there are two different questions here. If we were at 300,000 still, and this wasn't even an issue, and you didn't need additional eyes to look at these things and just to look at one dispute at a time, that'd be one cost, right? Nominal. But now you're talking about 10x the amount of volume or more. Actually, it's like 12, 13x. So my question is, how has that affected the bottom line of these entities? And what I'm really getting at now is if they've had to stand up part of their organization that costs millions, that can lead to price increases so they remain profitable. And mortgage companies and consumers could end up basically eating that, turd sandwich, for lack of a better word. So am I following the right path here?
There's definitely a cost to the entire ecosystem when someone is trying to manipulate it to remove negative information. We have to staff up. We have customer service. Large financial institutions have to receive the complaints. They have to have customer service in place. There's always a cost to this.
What is the magnitude? Is it tens of millions of dollars? Is it more? Is it less?
I'm sure it is. When you look at the entire market, you have 15,000 lenders, and you have 350 million consumers with a credit file. Some percentage, 4 million of them, are filing disputes. We have dispute process outside the CFPB, and we get millions of disputes every year, and we handle them, right? Because that's part of our obligation under FCRA. And we are fine with that. It's when you start having credit repair organizations, companies that are charging consumers and convincing them to do something that is not in their best interest or the system's best interest.
What is your best solution to this issue? Have you presented one?
Follow the legal dispute system that's been in place for decades. file a complaint directly with your lender or with the CRA through the process that's been established.
But that's not, Dan, that's obviously not going to happen. Well,
it happens every day. It happens every day. The consumers go to that system, millions of disputes because there's millions of trade lines.
Yeah.
We handle them in an orderly fashion under the law. What they're trying to do is go around the system that's been established to overwhelm it so that a lender then just says, I'm not going to even deal with these. I'm just going to take them off. It's just easier for me to take the trade line off and delete it rather than go through the investigation, make a decision, and potentially take liability of being sued. So lenders are making a decision to just wash it off in some ways.
Right. It's happening every day, but too infrequently are consumers doing it the right way. We can agree to that because you just gave us the stats. 4 million credit disputes going into the CFPB annually, which is like a 12 to 13x what it used to be, of which you said over 90% are an attempt to remove a derogatory. So yeah, okay, yes, consumers should do that, but they're not. Okay, the problem, as you said, is getting worse. So my question is, what is this? I'm sure you have a solution or a proposed solution to mitigating this or making consumers have to actually validate that whatever they're disputing is really a derog.
So I think there's two approaches. One is the credit repair organizations' behavior themselves. The companies that are charging consumers $35 a month to, quote, improve their credit and having better oversight and enforcement. There have been enforcement cases against several of them that are taking money in advance from the consumer. Like, there should be better oversight on those organizations that are trying to manipulate it and take advantage of the consumer. The second is giving the consumer who has a legitimate problem a clear pathway to get assistance, and having the CFPB look at their systems that it has allowed this enormous increase to put it in some kind of protection so you don't have chatbots, you don't have AI, you don't have these tools that are not even the consumer filing the complaint, we believe. We think it's the CROs that are filing it and lying and saying they're the consumer as a third party. So having two-party authentication, having different systems to verify that that's actually the consumer who is filing the complaint.
No, that's the other thing is you've got people that have legitimate problems that now have to wait in a fraudulent line. So I would imagine that's slowing down the people that really need the attention.
That's right. That's what we keep saying is, like, you have to get rid of the noise to help the consumers that need assistance.
So Dan, how much time do you and your organization spend on Capitol Hill trying to raise awareness about this? Significant
amount. Credit washing is one of because what happens is it degrades the entire system, right? If you are artificially inflated to a 780, right, but you really should be a 680, that doesn't help the system at all, and lenders lose confidence in it, and now they don't know what I'm lending to. Am I lending to a 680 or a 780? Now I'm going to extend credits, opens up risk, right, to the system. You're going to have foreclosures and defaults are going to go up.
No, it's very clear the impacts that this is having and can have. In fact,
forget about us as an industry, right? Forget about the impact and the cost on us. What we should be focusing on is the harm to the consumer.
Of course. Yeah. So this is, this is something that gets talked about a lot. Like, this is an article just a couple of days ago on the impact of credit washing on the car industry. And this is a very fresh article. First party auto loan fraud losses up 267%. Third party fraud losses up 161%. Credit washed auto borrowers charge off far higher across every credit tier. Lenders lend more on a falsified risk picture, absorb losses, price it back into everyone's rates. And that's what I was getting into with you before about the cost to manage this. And obviously these companies are not these three main companies that you help to represent, your trade group, CDIA, Equifax, Experian, TransUnion. They're not in the business to lose money, right? So if they've got to spend tens of millions to stand up this defense system, then they've got to raise prices. And we've obviously seen prices go up.
So, you're right, but you also had to look at the lenders that have to process all of these as well, and the cost that they incur.
Oh,
So
for sure. No. Oh my God. Like we
they're
may,
gonna
yeah, we're gonna fall victim too, because we're gonna give them an A plus
you're gonna
grade,
pass
rate. Yeah, we're gonna give him 6.5 when
Mhm.
their credit really was more deserving of a higher risk, and that's
but you
7.5.
but you also have to process all of those disputes and those complaints. So your cost on the customer service side to handle the complaints is going to go up.
Yeah.
And you're going to pass that cost on as well.
So you said you spend time on Capitol Hill, a significant amount of time. You've mentioned the CFPB. I'm sure the FHFA is somewhere in here. Let's start with the CFPB. I mean, this has been a scaled back arm of the government, right? From 1,400 employees down to 200, 300. And so first of all, it's a two-part question. Are they aware and receptive to this being a problem? And are you getting the kind of traction you would hope to get?
So both the FTC and the CFPB are very aware of the credit repair organization industry and their tactics. There have been enforcement actions against several of the largest players over the years. They're aware of the risks of their complaint system being misused at the detriment of consumers. There's a balance of making sure the consumer who needs assistance gets it. I am seeing an indication the Bureau has announced that they are looking at the complaint portal, because that rapid increase in numbers just doesn't make any sense. There's clearly an operational issue that's happening. I don't know what that is. That is up for them to decide. We know that it's in our space, and it is complaints that are really legal FCRA disputes. What they're doing is they've made announcements that they are looking at ways to protect the consumer and give the consumer their option to file a complaint, but to keep bad actors out of that space.
I mean, to
One
me,
area,
I'm not in your business, but to me, it seems pretty simple. Like, make the consumer prove that they were a victim, rather than just be able to make some frivolous claim. Like, put up some kind of a barrier where you have to legitimize what you're saying, and that you would think that would root out 80% of that bad number.
yes, we agree with you. There needs to be some protections on the front end to make sure that it's the actual consumer who's filing the complaint. And the complaint is really, we believe that if it is an FCRA dispute, they shouldn't be going to the complaint portal at the beginning of the process. They should go through the legal process of contacting the furnisher or contacting the CRA, allow the investigation to take place, right? Let us do our investigation, see if it's inaccurate or not, make a decision. If you, at that point, haven't gotten the satisfaction you think you deserve, right? A full investigation under the law with the procedures and protections in place, then you can file a complaint. That's really what we're asking. That will cut out a lot of the noise.
I mean, that makes perfect sense, and I'm in favor of that too. I hope our listeners are. I mean, is there any? We're not wrapping up yet, by the way. We still have a good. I've got at least 10 more minutes with you if you can hang on.
Sure.
But I mean, I should. It's appropriate now, I think, given where we are in the conversation, to ask you: is there anything that the mortgage industry can do? Anyone involved in any links in lending chains to help support this effort?
It's an interesting area, because the entire financial services industry is impacted, and they've all seen the risks of the complaint portal at the CFPB over the last decade. You can go back and look at comment letters from almost every trade association identifying the risks associated with parts of the complaint portal. And we've been saying it for 12 years. Like, this is vulnerable. It's not good. There's credit repair organizations that are taking advantage of the consumer, and they're selling them goods that they're not actually delivering on, and they're taking advantage and manipulating the complaint process. The CFPB has been responsive. They identify it. Hopefully they will be able to create some procedures in place to make sure that the consumer who actually needs assistance gets it. And
let's stop there. What's your confidence level that something will be done in the next 12 months?
It's high. I think they've already announced that they're making changes publicly.
By the way, I'm hearing a lot of noises in there. I'm hearing a lot of dinging, a lot of buzzing. I may have actually heard a dryer go off too. Did I hear? Are the clothes dry? Was that what I heard?
I don't know.
Was that the dishwasher? What's
I'm
going on?
Working from home. I got to do the dishes. I got to do the laundry.
You're very versatile, Dan Smith.
Got to stay.
All right, let's talk about the single pool, shall we?
Sure.
I would imagine these entities, I wouldn't imagine. I know for sure that they're not in favor of a single pool. I'm not in favor of a single pool. CHLA is not in favor of a single pool. I've done research on our own closed loan book. AEI has done a lot of work on this as well. But the MBA, the Mortgage Bankers Association, they will not let this go. They want a single pool, despite the risks that are involved of putting people in, the people that deserve better credit buckets, putting them in a situation where they're diminished, and then taking people that don't deserve to be in the higher credit buckets, and basically another version of what you're talking about here. To me, that's credit washing too, in a way, because if you happen to pull the right score, and that's 710. And I saw one yesterday like this, by the way, here at NFM. 710 was the top score. Then they had a 670 and a 610. So that's a situation where if a single pool works and they pull that 710, you're never going to know what led to that 610 because it doesn't show up. This is very problematic. I don't understand why we're still talking about this months and months later. To what extent can you shed light on this and how you feel about it?
We could spend hours on this topic. So maybe we do at some point if we feel like it's helpful for your audience.
Give me the crib notes.
I would say the value of a credit reporting system is its completeness and its accuracy. So the more information you have in the ecosystem that a lender can use to evaluate the credit worthiness of a consumer, the better off they are, the better off the consumer is. You're going to make better decisions and put less people at risk, which means you could charge less, right? Which helps the consumer. Once you start picking and choosing your data, how much you have, you're opening the whole system up to enormous amount of risk. There is an abundance of evidence that shows that all three credit reports are different, no matter what another trade association happens to say. It's pretty clear that the three reports are different because the system is 100% voluntary, which means we can't force a lender to submit the information. They have to do it voluntarily. And it's evolved over the last 100 years. There used to be thousands of credit bureaus, not three, literally thousands. So you have the system in place now where you have this difference between reports. And if you pick one, you're going to get a 61. If you pick the other one, you're going to get a 71. What does that do to the consumer? It's either going to, if they pick the 61, they're going to pay thousands and thousands and thousands of dollars more in interest rate and LLPA fees. No question about it. If you pick the 71, the GSEs are going to get less money than they should be getting because they should be getting what was the other number? 760, something like that.
Yeah, you're talking about LLPAs that they would take a hit there.
LLPAs.
Yeah.
So and then you're also putting in someone in a home at 710. I think that was the number you used, that they should be a 675. So they're getting more credit, which means you're putting them in stress. They really can't afford the 710 credit. So you're giving them more than they should get, which puts them at risk of foreclosure and default. That's not a good result either, to put somebody, give them more credit than they can afford. So you got both sides of the spectrum. And that trade association likes to say, well, we'll put systems in place to make sure it's random. Good luck with that. They've never actually talked about it. It's not going to happen because consumer's really smart. They're going to pull a credit report and say, oh, I got a 660, but I know that my other credit report's 770. I'm going to go to a different lender and I'm going to have them pull that report.
Yeah, and that's what I mean. They had some data recently where they assumed zero gamification. That's not happening, folks. It's impossible for that not to happen. Right. Like you said, consumers are smart. Loan officers are smart. You can tell any consumer, hey, before we start this process, go to creditkarma.com or freecreditreport.com. Let me know what your high score is, right? That's all I want to know is what is that score? And that's the one I'm going to pull. So the last time we relied on mortgage people to make the right decisions, was the financial crisis. That was when we gave them the most rope, and we saw what that did. It sunk the entire global economy. So I'm not saying mortgage people can't be trusted, but I mean, come on, to say that they're not going to gamify the system is just really, honestly, irresponsible.
Thank you. I would say the other side of this is, how does the investor respond? And an investor is going to have less confidence in the credit reporting system if they don't know that they have a complete and accurate picture of the consumer. You bring in volatility and uncertainty the day you institute a single pull, because every investor is going to go, I don't know if this is a 660, 710, or a 610. And so I'm going to have to price accordingly. So I'm going to price it to 610, even though the score you got was a 710. Because you no longer have a system that is complete and accurate.
It's going to destabilize the mortgage-backed security market for sure.
Right. And what happened with the Vantage score, FICO recently, when the Vantage score came out? What was it, a 25 basis point?
It was 20 bit. UWM put in a 20 bip kind of governor. Was that? Well, that's a good question.
Well, I'll guarantee you the reason is they don't know how it performs because they don't have the historical experience. The same thing's going to happen on a credit report. I have no idea how that single report is going to perform. So I'm going to price it accordingly. I'm going to charge the consumer 25 basis points more, or the lender 25 basis points more at a minimum, which is thousands and thousands and thousands of dollars the consumer's going to pay. Just on the investor side, forget about what rate they got it, if it was lower or higher or an LLPAs. We're talking, depending on how long the person holds the loan, $10,000, $20,000, $30,000 they're going to pay because someone chose one credit report instead of three. $50, $60, $70.
Why do you think the NBA? Why has the NBA dug in so hard on this? Is it just because? Is it just because it's the best idea they have and they're looking for a win, or is it just to create noise, misdirection? What is it?
Because it's the best idea they have. They got bigger problems.
That's what I'm saying. Like, why go so hard, so fast? And then to speak for the members, like they're like, I'm a member, by the way. I cut a huge check. All right. And I know dozens of other people in my spot who write those checks who are also not in favor of that. So to stand up and say my members support this, that's just inaccurate. So can you give us your best idea of why they're so steadfast on this?
I would say I'm not in the mortgage industry. I've been in the mortgage industry from a policy standpoint. I scratch my head every day when I look at this. I see no value to the consumer. And part of our job as trade associations is to protect the consumer, right? Or we're going to have financial crises with stated income, for example, right? Part of our job is to have responsible policy. I would say follow the dollars.
Yeah, I was just going to say, hey, you know what? I'm going to connect that dot. What do you think about that, Dan? Because you know who benefits? The largest lenders, the ones that pay the most to the MBA. I'll name just a couple. Rocket, Freedom. Those are probably 1, 2, or tied for 1. And they would benefit from a single pool because they've got, the funds and the systems and the retention all lined up. And so they would benefit from being able to push that stuff in to the window.
So Greg, what you look at is what is the actual policy requirement of the GSEs right now? You must pull the 3 reports. And if the reports are older than 120 days, you need to refresh it. That's it. It doesn't say when you need to pull the 3 reports, right? They're making business decisions. And maybe those business decisions are exactly what they are in their best interest. But there is no requirement in the books at the GSEs that say you must pull it at origination from all 3. That's a business decision. There's no policy that says you can't charge the consumer up front for those costs. That's a business decision. You shouldn't be promoting policies that are just based on business decisions. because
Do you
who gets
have
hurt? The consumer.
anything you want to say about Vantage Score and their entry into the market? We're seeing an adoption right now. I mean, it was at the beginning of July. It was up to 3%, and then it crept up, I think, second week in July to 4%. I heard yesterday that it's now 5%, the amount of transactions that are being purchased by the GSEs. So they're starting to gobble into market share, and these are, Vantage Score is owned by, several of your huge clients, Equifax, Experian, TransUnion. What can you say about Vantage Score?
We've been very supportive. The industry's been very supportive of competition, and let the competition play out, and the lenders and the markets will decide what product is the best for them and for the consumers. And so the more competition, the better. And
of course,
we hear that criticism in the credit bureaus that there's only 3. Earlier, I stated there were thousands of them, right? You can compete in the credit reporting space if you decide to take on the legal risk of the FCRA. Anybody tomorrow can start a credit bureau. There's no law that says you only have to have 3, but you're going to have to take on the liabilities of FCRA, which are significant.
So I've asked this next question 1,000 times. I've gotten 1,000 different answers. Why do we need CRAs? Why can't everyone just go directly to your clients? Why can't everyone just go get that credit report from Equifax or Experian and TransUnion and piece it together? Any opinion on that?
You mean, why do we have resellers?
Yeah. Why can't we just go direct to the people they're going to?
They can. The resellers offer a really good product that the mortgage industry benefits from. It's not just taking the 3 reports and sending them over, right? They consolidate them. They add on other information, if it's appraisal information or employment verification or income verification, right? They're providing a service to streamline it for the mortgage industry. That's a choice.
Yeah. All right. Good answer. I'm almost done here. Julie May, who's a vice president of FICO, she recently published a sponsored ad on Housing Wire pointing out that FHFA said that they are not in favor of Vantage Score and they preferred FICO. She didn't put any date parameters around that. And why would she? Because those findings were from 2020 and 2021. They're dusty, they're old, they're stale. I found it misleading. Number one, did you see those comments? And number two, any comment from you on that?
No, I think we have a competitive process beginning of FICO and Vantage Score in different products. And that's how capitalism should function. Let them compete on a level playing field and let their products show their value.
Yeah. What last question? What keeps you up at night in terms of the credit space?
I would say it is an enormous value to society as a whole. And having a complete and accurate credit report that lenders and employers and tenant landlords can rely upon for its completeness and accuracy is vital. And I see a lot of policy proposals that interject their political opinions and degrade its value. So, for example, medical debt is an example where there are states that are trying to remove medical debt from the credit report. Terrible situation, but the reality is if somebody owes a debt for $25,000, no matter how that debt happens, that is important for a lender to know if they're giving somebody a $200,000 mortgage. The debt is still owed, right? So when policymakers arbitrarily decide that their state, for example, should have different rules, you're going to have a 50-state matrix of 50 different credit reports, 50 different scores. I don't know how the system functions if that's the case.
Yeah, we're on the same page on that too. Dan Smith, President, CEO of the Consumer Data Industry Association, CDIA. This was long overdue, this conversation. Really appreciate your time here on this Monday and hope to catch up with you again soon.
Great. Thanks a lot.
All right. Enjoy the rest of your Monday, everyone. See you next Monday on One-on-One.